5, 4, 3, 2, 1, 0.
Ladies and gentlemen, I appreciate very much your generous invitation to be here tonight. You bear heavy responsibilities these days.
Welcome to Stock Legends Radio Show, seeking answers, opinions, and the inside scoop, putting you in the front seat on Wall Street.
In today's market,
this is breaking news. Where is it going next?
StockLegends.com.
Ladies and gentlemen, welcome to the Stock Legends Radio Show, Episode 2. We have a fun and exciting show lined up for you today. First, let me introduce today's hosts. Myself, Quick Draw, Matt Chart, our Senior Technical Analyst. Matt Chart, welcome to the show.
Hey, Quick. Great to be here again. Looking forward to an exciting show. We've got some great guests here lined up for today, and I couldn't be happier about today's show, so looking forward to it.
Also, please welcome back to the show as a guest host, See If I Care. Welcome to the show.
Aloha, guys. Stoked to be back.
Hey, it sounds like you're up in Hawaii. How are the waves?
The waves are starting to come up. It's winter. The sun's out. It's a beautiful day.
Hey, it doesn't get much better than that unless you're on Wall Street. Okay, now let's go through this today's lineup. We have special guests, author James Timothy White and owner of Financial Buzz magazine. For the Traders Talk portion of the show, we'll be hosted by myself, Quick Draw, Matt Chart, and See If I Care. Rolling into the market update segment of the show, we have the international forecaster in the house, Bob Chapman, the man himself. So let's go ahead and recap. Last week, Matt, we did some predictions on the Dow and how we thought it would perform over the coming week, and it's amazing how close your predictions actually came to what unfolded this week in the market.
Well, yeah, I think I'm trying to remember exactly what I said, that we wouldn't go above 11,400. We went up to 11,390, and now we're starting to see another pullback. So look for a red week coming up. So we're basically looking at that support level around 10,600 on the Dow, and any move below that, we could see another big panic sell-off like we saw in the end of July and August. So we're probably going to spend a little bit of time above there, but we could see a big rally occur if anything fundamentally changes, like any sort of quantitative easing or big bailouts injecting money in the markets. But as it is, technically, it looks like we could be seeing lower prices. And that's also with oil, too. We've seen oil dip down as low as around $75 in the last little while. And basically, oil seems to have ended its big run. We ran up to $115 almost, and now we're down to half that. So we've had a big 50% retracement so far almost. And oil prices could continue to go lower. The U.S. dollar looks like it's sort of topped up a little bit here around 78.80 on the index. It's the upper momentum starting to slow down. Could be possible we might start to see a U.S. dollar pull back in the next few weeks as we encounter a little bit of resistance. But certainly U.S. dollar does seem to be that safer haven for people, and we're continuously seeing money pour in there, but we are seeing that trends beginning to slow down.
Now, with the Dow closing up down 2% on Friday, NASDAQ down just over a little bit over 2.6%, S&P down 2.5%. What's it going to take to really turn this around? I mean, quantitative easing, is that what we're in need of? Or
that or some good job numbers. I mean, the job numbers continue to disappoint, and unfortunately, it's just the way the economy is right now. We're not really going to see any recovery. We have to have a recovery in the jobs market to really have a recovery of the economy. I mean, jobs are the economy, let's face it, and without it, I think that's why Obama is trying to push for that jobs bill. But from looking at the numbers, I was reading somewhere it would be like $150,000 per each job created. Does that make any sense to anyone? It doesn't to me.
Not to me. How about you, See If I Care?
I'd have to say I'm pretty much on the same lines as you guys, just looking at all these things. A lot of these charts, especially look at a weekly chart on everything you just discussed, from gold to the Dow to the dollar to oil. They all look like, besides the dollar, they all look like they're, right at that make or break. I see big bear flag setups, not that they can't be reversed, but they're at the bottom of those flags, which, speaking on that Dow, it's sitting right there at that 38.2 retracement. So I'm pretty much right there, and I think it is jobs, and that, we got a big week coming up on the economic side, the calendar. We got Big Ben speaking on Tuesday at 10 a.m., so keep your eyes on that. He always moves the market. Who knows what he's going to say? That employment situation on Friday at 8:30 a.m., I think we're on standby, and it's all going to be about Europe. And, now like we got the Wall Street standoff going on, and I think there's just a lot of things. I think you see the VIX move higher and this market move lower.
Exactly.
End of third quarter, rebalancing coming at you. You know, we got earnings at least, and if those earnings, it's all about the PE, right? So if those earnings don't start hitting those price multiples, we could really see some serious selling, which will be a buying opportunity. But you know, the pain is there if you buy a little too early trying to catch this knife.
Right. Greece falls short of deficit goals. We have the protests on Wall Street. Very curious
Let's get
to see
into that a little bit.
Yeah, very curious to see how these protests on Wall Street are going to affect the market. I can't imagine it having a positive effect. I mean, last count here said over 700 peaceful protesters occupy Wall Street. I'm sure it's much more than that now. And let's really ease into the topic. JP Morgan. Now, JP Morgan actually paid the New York Police Department $4.6 million. Now they're saying that this is for
on their website too.
They're saying this is for laptops, 1,000 laptops and security monitoring software. Now let's open the body up here and take a look at the guts. Okay, we have a major financial institution that was just recently bailed out. Now, who bailed them out? It was people just like me and you. They actually took our dollars and gave them to these banks. Now, it seems very ironic that the banks get their toes dipped into hot water, and now they're donating money back to the government and the police department almost as an act of a bodyguard position. Where is the fine line? Where do we draw the line in the sand and say, hey, this is enough? This is not the way it works. You know, you do not take and use Americans' dollars at will. These kinds of things need to stop. Okay, we see the protesters being arrested for peaceful protesting in large groups. Actually, the media uniquely has kind of swept it under the rug for as big of a situation it is. We see the police pulling people out of the crowds pulling back, and it's really an ugly situation. You know, how is this going to affect us, Matt? I mean, where's your position on it?
Well, I mean, clearly to me, it looks like a big conflict of interest when you have a large financial institution like JP Morgan donating money to the New York Police Department. There must be some sort of conflict of interest there. I mean, who are the police serving? Are they serving the people, which they're sworn to serve and protect, or are they arresting people protecting JP Morgan? This is a dangerous line that appears to be crossed, and we need to get some investigative journalists into this and some major publications really trying to expose this issue and find out what's really going on.
Exactly. See if I care. What's your position on this? I mean, where's the line between civil rights and a complete government and financial system takeover of the general population?
Well, I think, you know, the majority of these people that are in this riot, you know, well, I shouldn't say majority. I think a lot of them are just upset with the whole economic thing. I don't think these people are traders like us that are mad because their stock's down 20%. You know, they're over there protesting something that I really don't know if it's the root of the problem. I know Wall Street is, you know, this and that, and Wall Street's ran by politics nowadays, even politics overseas. But I mean, these guys, obviously, it doesn't seem like they really got a leader going right now. And I think it's spawning. I think it's popping up all over the place. So, you know, any type of, you know, you got Ron Paul. I think he's opening up a lot of eyes that have been shut for a long time. You know, he's getting a lot of notoriety. And I think that people are looking for a leader. And if this movement gets a leader, and it looks like maybe some of the unions are starting to back him a little bit, the federations of teachers and the transport workers union, local 100. I mean, they got like 38,000 members. They got money. They know how to put together a good group. So, I mean, these guys could really actually start moving something. And on a personal level, I hate to say it, I think that it's all kind of another ploy to inject more money. It's all, not that the people there don't have the intentions, but who sets forth the intentions and what is the end result? Where is the gain to be made? And I see it being made in more devaluation of the dollar, more quantitative easings, more stimulus packages, whatever they want to throw at us. Now you got our Congress ready to go after China on their inflation. What about ours? You know, I mean, it's a lot of heavy stuff to look at, but I think as a trader, we're getting very clear signals on buys and sells all the way going back to when Obama was elected. The government has given us a handbook, and if we read it properly, there's a wealth to be made here, guys.
Oh, yeah, it's buy when quantitative easing comes out and sell when it goes away.
Yeah, I mean, how much easier does this get?
They put a timeline along when quantitative easing is active, and you look at a market, and it's just like, oh, wow, okay, this is all it takes. You know, it's as easy as that.
You know, the thing that's kind of unnerving to me is that you look at a map of the U.S., you've got cities, states, school districts, police departments, $3 trillion in pension funds invested in J.P. Morgan. With the civil unrest and them being put under the magnifying glass, you've got all of this private money, all of these funds tied up in these banks, but then now you turn around and you see these banks go ahead and sponsor a police department to beat back the general population. To me, it's very unsettling, and it's tough to watch. I'm very curious to see how the smoke clears here, but I mean, at some point in time, someone has to step in and basically say enough is enough. You guys don't write the book, you don't write the rules. The United States is built off democracy, kind of has to stay there. Now, the U.S. dollar now is showing signs of strength, of course, but at one of the lowest historical points that it's been. The U.S. dollar has to be hyperinflated at some point. Matt, we were taking a look at some different things, and the amount of money it's actually been printed in the last couple of years is astronomical. There's some new job bills coming into place and some big-time expenditures, obviously, that are also going to come from printing money. Short-term and long-term, I mean, how is this going to affect the stability of the country, coming into civil unrest and all these protests and things being put in a magnifying glass?
Yeah, well, I mean, it's basically this appears to be like the Arab Spring jumping up in the United States. Same thing we saw with social media revolutions, people demanding change. I don't know if people really know what they want. I agree with CFI Care. I think that they haven't really put a message out. A lot of people are just generally upset and they don't know what to do about it. So I think this movement needs a leader, and to try and somehow fix the situation. People feel like they're not being heard. And, I can empathize with that. I mean, if I lost my job and all these banks are getting bailouts, I would be upset as well. And we have to try and see both sides of the fence. The U.S. government is going to basically try and quell dissent by stimulating the economy, and that doesn't really appear to work. They just keep doing the same thing over and over again. I think it's Saudi Arabia. They were trying to quell their protesters by giving them, I don't remember the exact dollar amount, but it was a few months ago. They were giving them like $25,000 a person to try and keep them happy. And don't protest. Here's $25,000. Let's just continue on our merry way. Yeah. So what does Stock Legends have coming up? We've got an iPad coming out, and what else is going on?
We've got an iPad contest going on. Listeners can go to www.stocklegends.com, enter their email address, and respond to that automated email they'll get in their email system with their predictions of the Dow on October 28th. Last submit date is October 15th. And going into what Stock Legends has going on, trying to be sector specific, it will actually roll off this next topic here. On August 8th, commodity analysts from J.P. Morgan, again in the spotlight, predicted a $2,500 gold price. Now, the people that actually did that report were Colin Fenton and Jonah Waxman, and they predicted this by the end of 2011, $2,500 gold. What do you think of that?
It seems possible. It might be. I can't say they've always been right. It's definitely something that we should all consider. Gold is going to be eventually probably one of the last safe havens as the currencies continue to be devalued with more stimulation. Really, what else is there? I mean, there's no counterparty risk for holding precious metals. You own it. It's not been resold and repackaged somewhere that you may not even be able to know about. It's not tied to any derivative or anything like that. I think it's something that everyone should, try and have a little bit of in their portfolio.
By the end of 2011, that's just a few months away. Is there a possibility, and these are major analysts here taking a look at this, is there a possibility of a 40% gain on gold alone, not even including silver, because that historically holds a direct value to gold, but is there a possibility for a 40% gain inside of 3 or 4 months' time? And why such extreme numbers on a public presentation? What would that be based off, Matt? I mean, I can't even put into layman terms that, a 40% jump in 3 months.
Well, it does seem a little extreme at this point. I don't know. What do you think, CFI Care? Is that possible to have $2,500 gold? I think that we would need to see some sort of major shock to the economy. Something that we're not seeing right now could unfold, and we could easily see a huge jump in gold if we saw maybe quantitative easing threes expected by J.P. Morgan. That, I think, could possibly do it. We could see further devaluation of the U.S. dollar, and that could send gold prices back up on a run.
Yeah, you pretty much took the words right out of my mouth there. I think really that's about the only way you're going to see gold. Because, I mean, right now, with the way gold's trading down, I mean, if you look at you pull out a weekly chart on this bad girl, she came down and she kissed that 23.6 fib to the penny. and bounced off of it and hasn't even gone down and touched that 50-day moving average, going all the way back to early 09. So a little bit more downside from here. I wouldn't take that out of the picture, but going all the way for 2,500, I think the only way that's possible is you see a lot of negativity coming. And, this could, with all of the stuff that's going on in Europe, Middle East, now we got the Wall Street group going, and with leaders, definitely could see the government, U.S. government, come out and make those other easements look like child's play, because the first one wasn't big enough. The second one wasn't big enough. Okay, they weren't big enough. We need more, and just crush this U.S. dollar. That could definitely be a reason for people to run there so fast that, it could blow up to 25. I think anything's in the books with that. 40% is nothing. It's still holding. I mean, what's the U.S. dollar with gold going back to since the 2000 year percentage change is still up 30%. It's up 14.4% for 2011.
Mm-hmm.
Wow.
This profit taking hasn't even done nothing. It's just the hedge funds. I don't even see any big shorts on gold. Who's going to short gold? Nobody. This is profit taking because that's the only profits they got. The market's down. The Dow Jones is down 5.7%. The Wilshire 5,000, 11%. Russell 2000 is down 18% almost. I mean, this is where the profits are at, and this is where the profits will be if they do another QE3. And
that's something too I want to mention is that, a lot of people want to sell at this time because they need to lock in profits. You don't lock in a profit and report it on your balance sheet unless you sell. Everyone knows their earnings are coming up in the next short while, and, people are locking in profits as well. So there's a fundamental reason that we've probably seen this panic. That
Friday
people
was the
are
last
like,
day. Third quarter's
Exactly.
over.
Here at Stock Legends, we're also putting gold under the radar, especially after those predictions. And our next highlighted stock pick that we actually released this morning is ticker symbol SRNG. I think this could be very profitable to our listeners for the main reason. It's in a hot sector, it's in gold, and they are looking on picking up multiple properties alongside of some of the world's biggest gold producers, Anglo Gold and Barrick Gold, okay, both trading on the New York Stock Exchange under ticker symbols AU and ABX. Again, that's OTCBB, ticker symbol SRNG, New York-based mineral exploration company. It's developmental, but this is the opportunity to get in on ground floor, and this is why we love these penny stocks in OTC, is because you've got this company here. It's a real company. They're solid. They are looking in the correct areas in Africa, Tanzania, and Ghana, and this could be the opportunity to get in on ground floor, especially if gold actually does hit $2,500. I mean, don't you think that this is a great stock to put under the spotlight, Matt?
Well, yeah, potentially it could be. If it looks like the company is looking at releasing some geological survey results soon. So once they hear about that, we're going to be able to analyze what those properties are worth, and we're going to see some deals possibly come through in the next little while. They're going to lock in some acquisitions on the properties. So watch for those developments. And this is looking at the chart. You can see clearly the long-term charts are getting ready to turn around. So I think things are starting to turn in the right direction. This is one of those ground floor stocks you probably want to get into and just ride for a while and see how things develop.
Exactly. Yeah. It says they picked up a larger plot, 790 hectares. That's a lot of land. I mean, 2.5 acres per hectare, alongside of some of the biggest gold producers pretty much in the world. There's a very high probability of this stock basically going into rocket launch mode. We hope it does. We've really highlighted and done the due diligence here, and we think that the investors are going to have an opportunity to get in on ground level, especially with things unfolding, globally. People are running to the physicals, to protect their assets. We all saw the collapse in 2008. Unfortunately, people pretty much lost a lot of their savings and everything else, for reasons of 401ks all the way down to, businesses going south and having tax problems, which actually brings us into our next guest, which we are very excited to have on the show here today, author and owner of the Financial Buzz magazine, James Timothy White. He has multiple books out for release. One of them goes by the name of Asset Protection, What If? Also, James Timothy White, $1 Million Business Bible. James Timothy White, Born to be Business Savvy, 101 Ways to Financial Fitness, and last but not least, James Timothy White, My First $1 Million. We got a great lineup here. We'd like to welcome James Timothy White to the show. James, welcome to the show.
Hey, thanks for having me. I appreciate it.
Now, I think we've got a great segment here, and we can kind of go on topic with some of the civil unrest going on in the world. We see the market down. People have 401ks. I mean, they have retirement plans. You name it, tied up in U.S. markets. There's multiple situations that can pretty much bring the average person to their knees as far as assets and asset protection. Your most recent book is called Asset Protection: What If? And then it's followed by They Break Down Your Door Today, Seize All Your Assets, and Freeze Your Bank Account. You want to tell us a little bit about that book? Very interesting.
Yeah, sure. It's kind of a personal book to me. It took me about a year and a half to write it after all the research. We had about 5 lawyers review it and a couple tax attorneys and whatnot review it as well. Basically what the book is it teaches people on how to protect their assets during a downtime or when things may happen in their lives that they don't expect. We all plan for the worst, we hope. Unfortunately, sometimes things get a little bit hairier than we like. So what the book does is it teaches people on how to, take their mortgage out of their name, personal name, put it into an LLC in the United States or a incorporated company in Canada, and then basically hedge or protect themselves against any economic downturn. So if the bank calls your margin account, or somebody wrongfully sues you and you don't get the proper notice, instead of being tied up in court for 6 or 8 months, you can live comfortably and deal with the situations at hand.
Exactly. Now, you're actually speaking firsthand in this book, being a very successful business person yourself. Like anybody else operating in business nowadays, you always trip and fall on your way to financial freedom. And that was very true with you in your situation. Obviously, you're very business savvy. You made millions of dollars. Now, why don't you tell us about the personal situation that happened with you that inspired you to write this book?
Yeah, sure. Yeah, I started a business at 12 years old with a $20 snow shovel. To make a long story short, by the time I was 16, there's a contract here in Alberta called SNC Lavalin Nexicor, the Alberta Supernet, and I was actually awarded the prime contractor status. So at 16, I had the court say that I was actually could act as an adult because you have to be 18 to sign contracts. So we had to go to court for that, and then I ended up getting larger and larger. By the time I was 18, I had 300 full-time contractors and staff, and we had a couple hundred trucks across Alberta in 8 different offices. I sold that business off and started a payday loans company and a couple other investment companies. And when 2007, 2008 came, obviously it was detrimental to our business because we were so new. We didn't raise enough capital, et cetera, all the problems that new entrepreneurs have when starting a business. And then to make matters worse, my CFO at the time embezzled about $3 million of our cash flow, which was basically how we made our money from cash, right?
Exactly.
So to make a long story short, we were wrongfully sued. Somebody sued us, and they said they served us. Now, how somebody serves somebody generally in Alberta is they just basically sign an affidavit saying, hey, we served these guys at their premises, and they have been professionally served, so these guys have to respond. And if you don't respond within a couple weeks, 21 days, then technically they go into default judgment, and then they can send a bailiff and seize whatever assets you may have. Now, because I was a director and I was personally named in this lawsuit, well, guess what? A couple months later, on a Sunday, I'm sitting on my couch watching this Sunday football, eating some popcorn and drinking some soda. And all of a sudden I get this knock on the door, and I didn't know who it was, and it was this bailiff. And at that time, I had no experience with these people, right? I thought they were okay. They need to have due process, right? And unfortunately, on the back end, he did have due process. They did technically serve me because they had an affidavit signed, but I wasn't actually aware. So anyways, to make a long story short, he came in, he took all my artwork, he took all my furniture, he took my car, because everything was in my name. I didn't think, hey, I needed asset protection. Right? I thought, oh, that's just for other people. A, what am I doing wrong? And B, I have tons of money. I can support tons of lawyers to defend me.
Exactly.
Anyways, to make a long story short, we ended up getting all the stuff back, but that was 2 or 3 months later. Once we actually took the lawyer, we had to go hire a lawyer, pay him a $20,000 retainer. I had to then appeal to court and say, hey, this guy didn't serve me properly. Then it has to go in front of judicial review. It was just a really complicated mess, and it cost me a lot of money. Now, did they have to pay the bill? Of course they had to pay the legal fees, but again, they were a company and they had no assets either, or very little assets, because they did protect their assets. So what did I get at the end of the day? A piece of paper saying these guys owe me all the cash that I spent trying to recoup my assets that I rightfully paid for and rightfully owned.
Wow. So you're sitting there on a Sunday Nice, peaceful day out. This guy knocks on your door and he leaves with everything but the kitchen sink, literally.
Yeah, pretty much, yeah. It was pretty
Unbelievable.
devastating for me. And I called my mom at that time because I was scared. I didn't know what to do.
Exactly.
So I called my mom. I said, "Mom, get over here. I need your help." So she comes over and she was upset, right? And she says, "How could you do this?" And and she pushed the bailiff and tried to get him out of the house. But once you give them, hey, come on in, no problem, then they basically they have right to take any. Once they tag it, chance of getting it back are very rare. And what they hope for, or what a lot of these creditors hope for, including the government, is if they tag a $200 TV and take your $200 TV and sell it at auction, well, guess what? To pay a lawyer, it's going to cost you $1,000, I would say, if not more. So are you really going to spend $1,000 to go recoup a $200 or $300 TV? Probably not.
Exactly.
But the best part is if you rent a home or you own a home underneath a numbered company or in the United States, and I suggest an Alaskan LLC, then basically when they do a search of your real assets, your cars, your vehicles, they can't take it.
Let's touch on that real quick. Now, you specifically said an Alaskan LLC. Now, what would be the difference between, let's say a New York LLC? Why Alaska specifically?
Well, because it's you have to serve you there, and B, if you do, it takes forever to win in Alaska. There's a lot of rules, and I won't go into too much detail here, because I don't want to give legal or financial advice.
Exactly.
But it's just if you Google why choose an Alaskan LLC, it'll tell you right there, and then you get advice from a website. I don't want to be liable for anything.
Well, yeah, exactly. Coming into these hard financial times, and your biggest clients are actually Americans.
Yeah, we deal with a lot of Americans and European clients.
So some very good advice. And we want to direct all of our listeners today to www.jamestimothywhite.com. There you will find all of his most recently published books. Now, can they also be purchased through your website?
They can if you go to the jamestimothywhite.com and then click on, I think it's books and publications. You can click on the link. If you click on the book cover, it'll take you to the Amazon.com where you can purchase my books.
And then you also are the owner of Financial Buzz Magazine. Why don't you tell us a little bit about that and what it covers and how to get signed up for that magazine?
Yeah, correct. Yeah, I started a magazine a year and a half ago. We cover anything from personal finance to international finance to legal opinions, investment opinions, etc. It's pretty much a full-blown financial magazine. We also have the blog where you can blog about certain stocks and equities and certain investment opportunities, etc. But yeah, it's just an all-encompassing magazine that we hope to attract a regular listener or regular readers to, where we can actually show people what's going on in the financial services industry.
Now that's www.financialbuzz.com. We also see you've got a few sections here. You got venture capital, international. So it's an international based magazine covering venture capital and international based issues and opportunities.
Yeah, correct. And we also cover new issues. So if people are looking to find out, what new issues are going on, internationally and locally, we cover all the IPOs from Frankfurt Stock Exchange down to the TSX Venture in Canada, down to the the OTCBBs in the United States.
And how often are those released on your site?
Those are released generally every day. We have a couple of reporters that release those every day. Again, we try our best to get every company that's doing an IPO, but sometimes we do miss one. So if companies are going public and they want to make sure that they're on our site, just to email us, let us know that to post their company on our site, and we'd be more than willing to do so.
And they would reach you and contact you through the website. That's www.financialbuzz.com. Is that the best place?
Correct. Yeah, they can go to thefinancialbuzz.com and click on at the very bottom. There's a contact us section, and they can just fill out a form there. It's all pretty generic.
As far as that release, how many people roughly are going to view this? If the companies are planning on going public, what kind of market penetration can they expect front row seats on?
Yeah, our first issue of our magazine is going out October 3rd, which is Monday. We're distributing to about 25,000 accredited investors internationally, meaning Canada, Germany, Europe. Yeah, they're all my contacts that I've had from speaking and raising money myself. Now, just as a tidbit, I've raised, in the last 2 years, I've raised about $500 million for our trust company overseas and our local companies here in the United States and Canada. So, our investors are very, very active in investing, even in these current markets. And then we also send the magazine out to approximately 655,000 media contacts, from reporters, the New York Times, to financial people, to insurance representatives, etc.
That is phenomenal. Well, James Timothy White, ladies and gentlemen, James, it was great having you on the show. We'd love to welcome you back at any time and give you updates. For our listeners here today, we want to direct them to jamestimothywhite.com, also financialbuzz.com. They can get signed up for your magazine and receive it right at their house. James, thank you so much for being on the show today.
Thanks for having me. I appreciate the opportunity.
Investors, we are going to go to a quick commercial break. Tune in, and we will be back in a short minute.
Wondering about your retirement portfolio? Is your financial advisor experienced enough to combat rising interest rates, taxes, and inflation? Stop guessing and go to the expert, Robert Chapman of the International Forecaster. With 45 years of experience and concise investment recommendations, who needs sugar-coated excuses? Get the cold hard facts and a proven investment strategy. For a free introductory copy to the International Forecaster, call 877-479-8178 or go to theinternationalforecaster.com. That's 877-479-8178. 877-479-8178.
Sweetheart, now you're getting a little bit older. What do you want to do when you grow up?
Daddy, when I get older, I want to flip stocks.
You want to flip stocks? Well, how are you going to go about flipping stocks?
StockLegends.com, duh.
StockLegends.com? I heard that they have the best stock picks around.
Of course they do, Dad. Time is money. I gotta go.
Hello, everyone. I'm here with Bob Chapman from the International Forecaster. Bob, thanks for coming on the show.
Well, thank you for having me, and it's very nice to be here.
Very good. Bob, you've been a shining star of brilliance in these chaotic economic times, yet many of our listeners may not be familiar with you. You've had a very interesting career. You've worked alongside some of the world's most powerful people. Been deeply involved in the precious metals industry. Why don't you just take a few moments to tell us a bit about yourself?
Well, I grew up and went to school in Boston to Northeastern University. And I worked in counterintelligence for the U.S. government for several years. And I began my career in the stock market in 1959. And I was in the market as a broker for almost 30 years. I owned my own firm from time to time. I was probably the largest gold-silver stockbroker in the world. I had about 6,000 clients when I retired, so I had a very broad-based business. I did a lot of speaking at events. I don't do that anymore. I haven't done it for about 10 years because the traveling is hard, and I'm 76 next month, so it's even harder. And so I don't do that anymore, but I used to be number one in both speaking as well as in workshops. And I know that because they used to grade everybody. And so I traveled extensively. I've lived for extended periods of time in Africa, Central South America, Mexico, Canada, and in Europe. I speak several languages, and but they're getting rustier and rustier. And I love to travel, obviously. I currently, for the last 9 years, I've lived in foreign countries. I prefer them because they're more easygoing. And after I retired as a stockbroker some 24 years ago, I got bored to death. And being an A-type, I had to do something. So I started a newsletter, and it's worked out very well. And then I had done, during the 70s and 80s, a lot of work on television, some on radio, but mostly on TV. I'm mostly in the precursor to CNBC, which was FNN, which was in Los Angeles where I lived. And I used to have an office downtown in L.A., and I would go by their offices on the way home. So if they had any slots open, they'd ask me to stop in and fill in. So I got a lot of exposure in that industry. And now I'm doing about 30 to 40 hours a week on radio. And I publish twice a week. We have thousands of subscribers all over the world.
The International Forecaster.
And I talk about, pardon me?
The International Forecaster.
Right, the International Forecaster, which is about business, finance, economics, and social and political issues all over the world. And I try to back into what's coming. And people need that kind of information because they have to make all kinds of decisions based on it. And the major media doesn't give you a clue to what's going on because they're controlled by the same group of people. I think what people have to come to terms with, and a lot of them don't like to do this, and they poo-poo me, but the markets are controlled. When they instituted, the President of the United States, in August of 1988, the President's Working Group in Financial Markets, they gave carte blanche to the U.S. government to manipulate all the markets in the world 24/7. And that's exactly what they're doing. And you can see them do it. I spent 25 years as a trader, and I know the rhythm of the market, and I know what they're doing because I can see it. And you wouldn't be able to put your hands on that unless you had that kind of experience. And so it really changes things when government's in the markets, and you have to be on the lookout for it all the time. And it makes your decision making extremely difficult because you never know what they're going to do at any given time.
Well, you seem to have a lot of foresight into predicting what will be coming, and you've got a really excellent track record. I want to start off basically with two quotes I want to relay here from Albert Einstein and relay them to the importance of today's economic times. The first one is that we cannot solve our problems with the same thinking we use to create them. So essentially, if we apply this to today's current economic conditions, we've got the very same people that are largely responsible for the financial crisis in 2008 given more power to help us find a solution. How does something like this happen?
It happens because they're in power. And to refer to Einstein's comment, I tell people in my publication and on the air, and this is very, very important, particularly to older people like me, and that is you've got to reinvent yourself every day. You have to be able to cast off things that don't work. You have to understand things that will change. You should try to spend a good deal of your time with younger people because they have different ideas that can shape new ideas for you and for them in the future. I wanted to address that because I think it's very, very important. People, as they get older, get stuck in the mud. They don't want to change. All they worry about is how much money they're going to have when they die. And I think that's ludicrous.
Yeah, that's true. And something else I want to mention here about, let's go to the next quote by Albert Einstein, which I think also ties into the first one, is that the definition of insanity is doing the same thing over and over again and expecting different results. We've had multiple years of quantitative easing in the United States to try and solve our problems, and now that it's ended, the markets are falling back in recession. Clearly, it's not working. As we were told they would. Now, Obama and the Fed's solution is they're hinting at having another form of economic stimulus, and we see the same problems in Europe with multiple rounds of national bailouts. History teaches us that when nations come to the conclusion that we can simply print our problems away like we're doing today, eventually this leads to currency collapses and absolute chaos. So what I want to say is, are the people that are instituting these policies, are they simply insane?
Yes, and I'll tell you why. Well, first of all, at the beginning of your speaking just now, my advice to that is get out of the box and stay out. Stay on the outside. And that is a lot harder than what you're doing. But you're going to come up with some extremely innovative ideas because you're not being directly influenced by what's inside the box. You're not supposed to ignore it. You're supposed to look at it and sift through it, see if there's anything good there, and then go on to your own thinking processes. Now, to address the problem that the problemers have, and we'll call them problemers, and that is that they're in power and they don't want to be out of power. That's number one. Number two, in 1988, Michael Boskin and Ben Bernanke wrote a paper, and they said in that paper, now you got to shift your thinking now, that everything that Ben Bernanke is doing today doesn't work, and that's the truth. So you got to say to yourself, Ben, why am I doing this? And the reason why is he doesn't have any other answers.
Right. His motivation is not to solve our problems, but to continue his power struggle as being the one in charge of the Federal Reserve. They don't want to let the markets collapse because they're afraid they're going to lose their jobs. So they're simply delaying the inevitable, prolonging the problems, making them worse for the time being because it's the easy way for them right now.
The problem is far greater than that. And the reason why is that the banking and financial communities, via control of politics, via extraordinary control within societies, they have pushed the system right to the edge. And they've done it for two reasons, power and wealth, but there's a third reason that most people don't want to talk about. And if you read Foreign Affairs, the House organ, which I've subscribed to since 1960, or the Council on Foreign Relations, or the Trilateral Commission of the Bilderberger Group, you'll find out it's not only power that's involved, it's reshaping society. They want a world government. They want to be able to control everyone. And so at the very bottom of all this, this is what this is really all about. And if you want to understand their thinking, you study financial, social, and political history since the 12th century. And then you'll have a real good idea what they're up to. Well, most people don't have the time, nor do they want to do that. I did it. Very few people do it. That's why I'm able to come up with the decisions I do by backing into everything and saying, now, what would these criminal minds want to be doing now by doing this, that, or the other thing? And that's how I come to conclusions. There's nothing scientific about it. It's just like the monkey swinging from the palm tree by his tail. And every once in a while he slips and falls to the ground. And that's the mistakes. But this is where these people are coming from, where they're going. And so the mess that we see is them bringing the entire system of the Western world, that's what they're concentrating on, Europe, England, Ireland, the United States, and probably eventually Canada, the Anglo-Saxon world as we know it. They want to bring this advanced group down to its knees financially and economically, so they've taken the system to the edge. And now there's no way back. There hasn't been since 2003. And so what do they do now? Well, they're trying to captivate the system so that they can gain and exercise direct control. And every time something dreadful happens, like we just saw in Europe with the terrible financial condition in 6 different countries, Greece being the leader of the pack, so to speak. And yes, they have to try to fix that system for the time being. You might say extending the problem, or as Wall Street calls it, kicking the can down the road. But there's more to it than that. And you can look at the legislation that was passed in the Bundestag this morning, which goes to the Bundesrat tomorrow. And yes, they extended the money that Germany would be willing to lend to Greece and other countries. But within that legislation, if they did pass it, and there's been no word of this yet, of this segment, and what they want to do is create another group, and that group would handle the issuance of debt, probably in the form of bonds, to the members of the European Union. And they would parcel out within a rule structure exactly who gets what and what they're supposed to do with it, which is tantamount to control of those countries. They run them. They don't run themselves, really. But there's another aspect to this, and that is they want to be able to bypass the internal governments and their fiscal life through this committee, through this group. And that would relieve each country of its sovereignty. Because you have one currency.
One governing body.
17.
One legislation to write all the rules. One governing body to make the decisions.
Absolutely.
But they need an economic.
And that's what they're looking for.
Right. They need a single currency first before they can install the single governing rules. Right. They need to have a common currency. But I mean, we're seeing so many problems in Europe, and we're talking about the euro collapsing. If Greece falls out, Germany doesn't want to be a part of it anymore. I mean, they seem to be losing grip on the situation.
Well, you're right, and that's very interesting. But somebody's got to tell me why in the Bundestag this morning we had 523 vote in favor of the legislation and 85 against. And 70% of the German people don't want that legislation. And that tells you they don't listen to the constituency. They're more worried about keeping euro and the euro zone as well as the European Union together. And they're being paid off by the people behind the scenes in the banks and the industrial companies and service companies as well to do what they tell them to do. And that's what's going on. And so the people in Europe, particularly in this case Germany, in the United States, England, they're all up against the same thing. They have no representation because everybody's been bought and paid for, with the exception of a handful of people.
Right. And there's, something else that we should talk about as well. There's a 600-pound gorilla in the room that people don't really want to seem to address. The word derivatives was brought into public attention when the banking system collapsed in 2008, as they were largely blamed responsible. But the public may not be aware that the Bank of International Settlements reports there's approximately $600 trillion in derivatives. That dwarfs the global economy 5 to 10-fold, and 400 trillion of those are interest rate derivatives. And you even warned your subscribers about the economic havoc derivatives would unleash quite some time ago. What's going to happen when interest rates move in a different direction? Is that going to cause derivative losses to start compounding? What do you see happening with the derivatives market? Is that going to be a concern for basically the global economy again in the near future?
Well, it certainly will be a concern, but you've got to remember that these writers of derivatives, whether they're brokerage firms, banks, insurance companies, whatever, they're on both sides of the market at the same time, especially in custom derivatives, which a lot of the derivatives are custom, besides the credit default swaps and the interest rates and all of the other things that they do. And one of the disadvantages, too, is it's totally opaque. We don't even know what they're doing. There's no regulation. I mean, it's crazy. And so how do we solve that? Well, we regulate them. But they don't want to be regulated, and they control Congress, so they're not going to get really regulated. And they're going to want to go on their merry way, and all of a sudden we're going to have another Bear Stearns and Lehman Brothers, and the whole house is going to come tumbling down, and the whole entire world financial system will collapse. Incidentally, that's why gold and silver are so important. They don't owe anybody anything.
That's right. Gold and silver have no counterparty risk. With physical precious metals of those gold and silver, possibly copper, holding the physical metals don't have any counterparty risk. The paper contracts, though, do. Do you want to talk a bit about that?
My feeling is that the derivative markets have to be regulated, and they won't be. So that pushes us towards trouble. And sooner or later, there's going to be a problem. In the United States, there's 5 firms that own like 92 or 95% of all the derivatives, one way or the other. And of that total, J.P. Morgan Chase owns approximately 85%. So we're really only talking, in essence, about one company. And the players involved...
Sorry, so basically, are you saying that J.P. Morgan owns somewhere between $400 to $500 trillion in derivatives? That's a lot of money, Bob. I mean, if J.P. Morgan were to collapse, how would the American public be expected to bail out those sorts of losses?
No, they couldn't bail out more than 4 or 5 trillion. In fact, that's a figure 2 years ago I put in the problem that existed in Europe, but the 6 countries are problematic. And I said to somebody in the German government, the number's going to be 4 trillion. And he said, no, 1 trillion. And I changed my figure to 4 to 6 trillion about a month ago, and they changed theirs to 3.5 trillion. They're finally catching on. And the people in those countries, they really don't care. They said, we didn't do this. Our governments did it, so that absolves us, so we're not going to do anything. And if you cut our salaries, we won't work.
Right, exactly. Okay,
so getting back to derivatives, I had the struggle then. I've been on radio and television and in the editorial section of the larger newspapers in Greece a number of times and expressed that. And they've known that information for a long time. And it might be one of the reasons why they're resisting, saying, no, we're not going to do that. I mean, the rest of Europe has put a deal together that's going to be funded, but they may lay down and say, no, we're not going to do that. I mean, they got a strike every day, 150 to 500,000 people in the street every day.
Right.
It's like a new job.
And we're seeing people now starting to camp out in front of Wall Street as a form of protest. Basically, people are they're not allowed to set up tents, but they're bringing their sleeping bags coming from all over the country, and they're just going to wait and protest until something happens. This is like the Gandhi effect, where people are peacefully dedicating their souls, their lives, their bodies into creating some sort of change, because these people understand the system is broken, it's not working. They are the ones that are suffering, and there are a very small group of people that are benefiting from all this, and they're not happy.
Wall Street, banking, and our government in the United States are the enemy. And it's unfortunate. I spent a greater part of my adult life on Wall Street. And so I know what they do, how they do it, and how they take advantage of the public. And you're having controlled demonstrations on Wall Street and other places. And the people who are doing it, if you look at their signs, it's pretty evident that they're very liberal, socialist, communist people. Now, I believe that people, no matter who they are, have a right to demonstrate peacefully. And I think that's good, because they're bringing to the attention of the American people, no matter what their thought process is, that these guys over here are doing this to us, and we don't like it, we're not going to put up with it anymore. And there could be the beginning of major protests throughout the country. Now, of course, our major media has barely covered it. The internet has. It's all over the place. Pictures, movies, the whole works. And you can't keep something like that secret. It's just like in England recently, about a month ago, they were trying to burn down half of the country. We got some on it, but we didn't get much. They try to keep it a semi-secret. And you can't keep on throwing these things under the blanket. It doesn't work.
Right, it just keeps building and building, and there are problems that are not being addressed.
Well, they have no intention of addressing them. These people could care less about the public of the United States, England, Europe. They don't care. They're arrogant. They think they're the masters of the universe. They think that they know more than anybody else, which is a tremendous shortcoming on their part, because there's lots of brilliant people in the world. Believe me. And a lot smarter than they are. It's just that they don't try to exercise their intelligence in the same areas that they do. But what we're facing here is a revolt of the people. Why are they doing that? Well, things are pretty crummy, generally speaking, especially in the United States. But we have another factor today. We have talk radio. We have programs like this. We have the internet. Well, we really didn't have that until 15 to 20 years ago. And so all the things that I've been trying to do for 53 years in informing the public have now become much, much easier. So everybody out there is finding out what these guys are up to.
Right. The audiences are growing exponentially because we have information that can be reached. We have information sources coming from multiple places instead of the major media cartels telling us what's going on. We have now independent thinkers and journalists that are able to really come out, do real research, and try and express their opinions, and that can be fact-checked by the entire planet in an instant. And it's just such an amazing tool. The internet has definitely been a key to informing people as to really what's going on.
And I get stampeded by people wanting me to go on radio. And I try to get in every program. And it really hurts my research, and it hurts my writing. I have to work even harder than I already did before. But it's worth it. Because if you could see the letters I get all the time, you saved me and this and that, things like that. And it's very gratifying that I've been able to have just one person, never mind hundreds of thousands or maybe even millions. And that's why I keep on doing what I'm doing. I'm very happy that I stay healthy so I can do it. And sometimes I get tired, especially these late programs.
Well, we do appreciate you very much. We do appreciate you very much coming on the show. I do just have one final question, and then I'll let you go because I know you're a very busy guy. You've got a lot of things to do. But I do want to talk a bit about the collapse in gold, silver, and copper prices last week. The media is telling us that the metal prices are collapsing because the economy is going back into recession. Now, it's true that when the markets collapsed in 2008, it did bring down the sector. But what's interesting to note is that this time things appear to be a little bit different. The markets were actually collapsing in early August. We saw a big 3,000-ish point pullback in the Dow Jones in just a few weeks, and basically gold was going on a tear. It ran up to $1,900 an ounce. Silver was holding around $40 an ounce. So this theory doesn't make sense, but what we do see is the CME raising margin hikes 15 to 21% right across the board on those three commodities, and on the announcement, that's when we saw the precious metals collapse. So it doesn't look like gold and silver prices are pulling back because of an economic collapse coming. They're pulling back because the CME is raising margin hikes. We saw the same thing in May when the CME raised the margin hikes on silver and silver collapsed alone. Gold was holding fine. It seems whatever margin hikes go up, the precious metals are going down. They're manipulating the paper markets and the precious metals, and I just wanted your thoughts and comments on that.
That's a wonderful synopsis. And it is being manipulated. It's the United States government, because their theory is, according to Paul Volcker, he used to be the chairman of the Federal Reserve, is that you have to have gold either unchanged or going down in value when you have emergencies in markets other than the gold and silver markets or commodities. And that's why under the President's Working Group in Financial Markets legally, they can manipulate all the markets anytime they want. And they can use all kinds of leverage. And that's what you saw in 2008 when they had to pull the leverage in that was being extended by the banks themselves to themselves, as well as hedge funds and other investors. And that's why gold and silver and the shares came down at that time, because the whole world was overextended. This time, we're looking at a situation where the hedge funds are short gold and silver in the shares. Big time. I mean, just look at the numbers. You can see them, plus the naked shorts, which the SEC turns their back on. They don't want to know about it. And they know everything that's going on. And they have 2,500 complaints in there right now that they essentially are supposed to be working on, and they're not.
Yeah, well, Bart Chilton is appears to be, one of the good guys here. He does seem to be taking an active interest in trying to have some investigations going on with J.P. Morgan and their shorting and the blatant manipulations going on in the silver market.
Well, that's true. and he has been a voice in the wilderness. He only can do so much, and he's appointed, and they can kick him out anytime they want. And yes, that is the CFTC, different than the SEC, regulator that doesn't regulate. They've been investigating silver for 4 years. I mean, I would think that they'd start tripping over it. I mean, how ludicrous. Do they really expect us to believe that they have an ongoing investigation? Of course they don't. And who are the counterparties, and where is the hedging for J.P. Morgan Chase on their positions? They won't tell us. They should tell us. They should be not an opaque situation, a transparent situation. We're not getting that, and we don't get it with the SEC either. The markets are manipulated. They tried it 3 times in the last 6 weeks. They took gold down, silver down. They went right back up again. I called the bottom. They did it again. They took it down. I called the bottom, went right back up again. They did it again, the one we're in right now. We're on the bottom.
Yep, silver and gold are starting to make a recovery. Looking at the charts, I mean, we see a very sharp pullback right on the margin increases, and then we start to see the precious metals prices start to creep back up again, and then, you know, they're just going to come back again and try and attack it. But eventually, you know, the manipulations never work. As David Morgan says, all manipulations end suddenly.
Well, I've known David for a long time. I helped him get started in the business. He's a very bright young man. And anybody under 50 is young. And anyway, you're not going to like what I have to say here, but that's okay. I say it anyway because that's the way I am. When you have manipulated markets, you can't use short-term charts. Throw them out the window because the manipulation negates the charts. Medium and long-term charts, yes. And I know lots about charting and cycles and waves. When you're getting manipulation, you've got to go to fundamentals. And the fundamental is they rigged the market. We'll use this time that we were just in over this last week. They took it down, and they capped it with the increases in margin requirements, which you discussed. And they did the same thing with silver previously about 3 months ago. It's coordinated. You can't guess when they're going to do it. You can't see in charts when they're going to do it.
I agree.
This is psychological warfare. It's them against us being the public. We're not in on it. We're not in and screwing everybody in the investment world, and that's what they're doing. And you've got a group of banks that own the Federal Reserve. They tell the Fed what to do. The Fed does not tell them what to do. Goldman Sachs, J.P. Morgan Chase, Citigroup, Deutsche Bank, HSBC, they all are owners of the Federal Reserve and have been for a century. And they're going to keep right on running things. We have to end run them. When they bring it down, we buy, we go along, and we force it right back up again. And that drives them crazy because they can't control it. I mean, how much money do you think it took to take down the market in commodities, gold and silver, over the last 5 or 6 days? Probably $50 billion. Do you think they can do that or want to do that every day? I don't think so. So that's why when you see these corrections, they're of short duration, 3, 4, 5, 6 days, and it's over.
Yeah, and then they go right back up.
They're going to cover their shorts too.
Mm-hmm. They're just trying to panic.
They don't want to lose
market.
money.
Yep.
And so look more at fundamentals is what I'm saying here. Because that's, I think, until things change and the government is no longer allowed to create an unfree market, we got to back into what they're doing. We got to get inside their heads, and you have to understand the criminal mind, because that's what you're dealing with.
I agree, Bob. I really want to thank you for coming on the show. Bob, tell us how readers can get a copy of the International Forecaster.
Well, the Forecaster is about business, finance, economics, social and political issues all over the world, published Wednesdays and Saturdays by email, around 40 pages each time. We have a hard copy that goes out to those who are not on the Internet. Everything you need to know every week is in that publication. Free introductory copy, go to theinternationalforecaster.com. Theinternational, FORECASTER.com. You can go to www.intforecastor.com caster.com, intforecaster.com. For those of you who would like to ask a question, we answer everyone. You could get a copy of either. And if you'd like a copy of our stock recommendations in gold and silver shares, we'll send out to you as well. That address is Bob, B-O-B, at intforecaster.com. Bob at intforecaster.com. For those of you who would like to call in toll-free, that number is 877-479-8178. That's 877-479-8178. You can get either copy, and if you'd like to become a subscriber, they have a special deal there, free 1-year subscription. The deal that they're offering is terrific. Take advantage of it.
Thanks very much, Bob. We hope to have you back again.
Okay, bye-bye.
Investors, that wraps it up for Stock Legends Radio Episode 2. We want to thank you for tuning in today, and happy trading.
The whispers are true. Games that are legendary. StockLegends.com.
All information posted by Stock Legends for informational purposes only should not be construed as an offer or solicitation to offer or buy or sell securities. By listening to this radio show or this poster or this video by Stock Legends, you are accepting sole responsibility for your own investment decisions. By reading messages, doing so in videos, or listening to the radio show, you acknowledge that the information hereunto contained within this message or video provided or radio show is for general opinionated discussion and for informational purposes only, therefore should not be considered to be complete, precise, accurate, or current investment advice. Be aware that internet persons, videos, and so on, not only on the original message board where this disclaimer was discovered or in this video show, but other message boards that is not limited to the originated video of the website, may be increasing or decreasing our share positions in security regardless of what they are saying or posting or construing on this radio show, and may be compensated in some way or form by a third-party investor in the company mentioned posted in this video or radio show. The non-affiliated third parties compensated may or may not have shares to liquidate, which could affect the stock price. Assume that any security mentioned is owned by Stock Legends and may be buying or selling, adding or subtracting away from the position that they have, regardless of anything said, inferred, construed, or referred to. Believe before or after starting company profile. Always do your own due diligence prior to making investment decisions. Never borrow money and buy penny stocks. Always remember penny stocks are very risky. You could possibly lose your wife, keys, car, house, and everything else comes along with it. Also, be aware that information provided concerning certain securities contains forward-looking statements that involve risks and uncertainties. As in any investment, never invest in a penny stock unless you can afford to lose your full or entire investment. We completely abide by the Fifth Amendment for this full entire show.